Volatility swept domestic markets last week, marred by declining global sentiments after the US Federal Reserve Chairman Jerome Powell propelled rate hike concerns on reiteration of hawkish stance. Yet, strong foreign inflows helped frontline indices end flat. The benchmark index Nifty 50, for instance, dipped a meager 0.1% last week, while the BSE Sensex fell 0.05%. While analysts attribute the Indian market's resilience to healthy foreign inflows, they fear the peak of FII buying may be over. According to VK Vijaykumar of Geojit Financial Services, FIIs are increasing their short positions in derivatives amid a surging dollar index that hit a 20-year high of 109.6 last Thursday. This and the US 10-year bond yield racing to 3.26% is unfavorable for emerging market equities. Analysts at Credit Suisse too have downgraded equities to underweight on the back of rising inflation and recession fears. Going forward, analysts see markets to remain range-bound in the near term.
The market is currently eyeing the central bank's guidance on interest rate trajectory as the US Fed turned hawkish in Jackson Hole Symposium, which signaled that Fed will continue to raise the rate till the inflation decline into a comfortable zone. Based on this, the probability of 75 bips rate hike expectation in September 2022 meeting has risen sharply, making the direction of bond yield critical at this juncture. The macroeconomic development that follows after this meeting will continue to influence the market in near term, will limit the upside from the current levels. These macroeconomic developments include ongoing Russia-Ukraine conflict, trend of commodity prices including oil, direction of inflation, growth in developed world, and the bond yields. Keeping this development in view, we expect market performance to remain range-bound in the near term.
Apart from FII buying, falling crude oil prices also supported Indian equities last week. Brent crude prices have retreated below the $100 per barrel mark and may be heading towards $80 per barrel level, hopes Mohammad Imran of Sharekhan. He says, "We expect prices to fall further under $80 in coming weeks. Though a resilient labor market in the US may push crude to test resistance of $92, we remain bearish on crude oil outlook in near term." Against this backdrop, technical charts suggest that 50-pack index can move towards 17,850 levels this week, with a support of 17,350 on the downside. The S&P BSE Sensex, meanwhile, can steer towards 59,800 on the upside, with 58,000 acting as a strong support. Fundamentally, the European Central Bank's interest rate decision, rupee movement, and crude oil prices will guide markets during the week.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.